In this video, traders, we're going to look at 5 ways to put a stop loss or to set your stop loss when you don't have a key level to work off. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so stop loss, generally we place our stop loss above or below a key level, right? So we're either long and then we're saying, okay, that's our support. We're going to have stop a few ticks under our support or a few points under our support, a few percent depending if we're swing trading. We might have a high or a low, but we normally have a level to work off. And that's nice because that sometimes kind of fits in. It's very definitive. It's very obvious. It's all good. Sometimes we don't know. And so how do we set a stop loss when we're in a trade where there's no real level to work off, or the level's so far away it's ridiculous and it doesn't make any sense for the kind of trade we're making? So here's some ways, guys, and also invite you to add yours as well in the comments section below, as always, and appreciate all your comments, supports, questions, etc. So imagine we've got this trade here coming down. For whatever reason, we're buying at this low. Now, I'm not suggesting we do this, but let's just say, for example, we're doing this. We have no real level below us to work off. It's not like it's bounced up and we're kind of taking the bounce and putting it under the low. So we're gonna have some kind of place to put our stop, right? We're gonna have some place to say we're wrong on this trade. So one way of doing it is we can use a percentage of the range or percentage of the move that we've had so far. In other words, if we've come from there to there, and assume this maybe is a longer term chart as well, so it could just be the drive lower, or we've been consolidating with a drive lower, or it could be the range of the day or the range of the month, whatever. We can use a percentage of the range, so we can say, okay, 50% of the range, 25% of the range, depending on how volatile the market is, etc., and use that as a stop. So if this was 100 pips, for example, 50% of the range obviously would be a 50 pip stop, 25% of the range, 25 pip stop. Not a bad way of keeping you relevant with the market conditions. There's no point using a fixed 20 pip stop if this thing's moving 1,000 pips, for example. You're just going to get pinged out all the time. So it brings you in line with the kind of range and the volatility in the environment you're in at the moment. Other one which does a similar thing is a multiple of the ATR. So ATR being average true range. Again, have it on a standardized setting, which is normally 14, guys. This comes as a default. And just say, hey, 3 ATRs, good place to put my stop if I'm looking for a kind of bigger move. Maybe I can tighten it up if it's not. And also depending on which time frame you're trading. So if you're on a daily chart, 3 ATRs is going to give you kind of a reasonable width. Give you a chance to swing it for a couple of weeks, couple of months potentially, not get pinged out on noise. You can't really, you can work around with that. You can have it tighter or wider, but at least then it keeps you again in tune with the volatility. You're not kind of arbitrary going, oh, it's a $10 stop when that's going to ping you out, or it could be so wide that it's pointless. So that's another clever one, quite useful as well. Day traders and swing traders. 3, largest candle range. So very often, guys, you can scroll back on the chart. Look at your candle, daily chart, 5-minute chart, 15-minute chart, whatever you're trading, and go, right, that's the largest candle I've had in this time period I'm looking at. I'll use that as a stop. So if you're day trading, maybe it's a 50 pip candle in 5 minutes, you're trading a 5-minute chart, that will be your stop. If you're swing trading, maybe you're trading for a daily chart and the biggest candle's been kind of 200 pips, then that could be your stop. The idea again is that you're looking at something that's a bit of an outlier, a little bit more than normal, and then applying that to your entry. That's quite a nice one as well. Number 4, guys, is a prior day, month's high low. Pretty obvious, and it's not necessarily say you've got a key level to work off. But if you have got something that's not obvious, i.e. it's a prior high or a prior low, rather than looking at today's or this week's or this month's, maybe you can go, right, well, it's the last quarter, it's the last year, and use that level, because sometimes it's not obvious the level to work off is right in front of us. Sometimes we've got to zoom out a little bit and go, well, actually, yeah, let me use that. So quite not strictly speaking a level, but it works quite nicely. And final thing, guys, which is one of my favorites, is the average rotation. So what I mean, so these would be rotations, okay? We've rotated back, rotated back, rotated back, and you could also call these a rotation. So in other words, you've got a drive lower, drive higher, there's 1, there's 2, drive lower, there's 3. And what's your average? And you want to take the average of these or the average of the pullbacks against it. So you don't average them all out, but just take the ones that are, because very often they're very similar. That might be, let's say it's 50 pips, the next one might well be kind of 55 pips. And if you take the average, then you can go, right, well, that's the average rotation. Or if I'm looking to buy a downtrend, I'll be taking these ones. Maybe these are more like 75. So my average 75, I can use that, add a little bit more if I want to. Basically it says if I'm wrong, then I know where to come out. And again, it aligns you with the current conditions. As far as I know, there might be an indicator out there that someone's programmed. This is eyeballing stuff, guys. You look at an eyeball, use a measurement tool or whatever tool your charting is, and just kind of have a look and say, right, this is the move we've had from A to B. These are the kind of pullbacks we've had over the time period. These are the kind of amount we've pulled back. These are the amount we've drove in the direction. This is my stop. So some quite nice ideas there, guys, to align yourself. I quite like this from a day trading perspective as well. Multiple ATRs, quite nice as well. Percentage of range, okay. Can be a little bit wider. That's the downside of that. But if you're looking for a bigger move, then that's fine. All right, guys, keep your risk management. Whatever you're doing, some ideas for your risk management. Take care. Bye-bye.